Ashok Genomal, who's MD Page Industries, joining in for details. Sunder, it's great to have you on the show. Thanks very much for taking out the time. This is as much as you can extend a pact timeline-wise to assure investors that the brand is very much with you.
Well, we as a family, as a group, we've been the licensee of Jockey for 60 years now. So this is a mere formality for us.
Right, but a formality which would, give comfort to investors that this brand is very much with you. I don't think that there was any point in time in the past that the market had that worry, but on and off, there used to always be these rumors doing the rounds about, you and Jockey separating or perhaps the pact falling through. So you've kind of clarified that once and for all.
Well, yeah, I don't know. I've never heard those rumors. This is something that even in 2009, they gave us the license till 2030. So this is a pretty normal thing given our relationship with Jockey,
Sorry, any other terms and conditions as part of this pact? I believe the royalty payment is also continues to remain 5%.
Yes.
That hasn't
exactly.
changed either.
No change at all in the terms. There's never been any change in our terms with Jockey since 1994 when we signed the license. And in fact, even in the Philippines where we've had the license from 1959, it's been exactly the same.
As a strategy, Sunder, while it's great that you've managed to extend that contract with Jockey up until 2040, there are a lot of Me Toos in the market also now looking at this aspirational innerwear market, if I can call it that. How is it that you're looking at the competitive landscape?
We like to look at, we like to think that the most credible competition can only be ourselves because we are way ahead in every aspect of the business. We understand this industry very well, the back end, the front end. So all we need to do is continue to try and outperform and outdo ourselves. And that's what we do every day.
Up until now, Sunder, you've been largely concentrated in the men's innerwear market. How big could be the women's innerwear market for you? And how is it that you're looking at capturing a dominant market size there?
See, right now, out of the total, we have innerwear and outerwear, right? The outerwear is what we call athleisure, and we have the innerwear. Out of the innerwear pie, 30% is women's, and 70% is men's. There's no reason why, at some point in time, it should not be the same. And so we are very aggressive in the women's business. Even while we continue to remain aggressive in men's. And out of the total pie of revenues, 70% is innerwear, 30% is outerwear, including socks. We see great opportunity for growth in that vertical as well.
Right, okay. But the women's innerwear segment, wouldn't you think is far more competitive? How do you kind of compare your positioning there in terms of gaining market share?
Yeah, women's is kind of fragmented. There's a lot of regional brands, That's not to say they compare with the kind of quality or variety that we have. But it is a fact that it's more dispersed and more fragmented. So that's why it's taking a little more time for us. But we are the largest national brand anyway.
Yeah. So I'm tempted to ask, Sunder, this 24% margin trajectory that you've been sitting on, it's a rising base. Can you hope to scale that up now that you've got confirmation from Jockey up until 2040?
No, the 24%, I think you're probably looking at the fourth quarter, EBITDA, right? No, I don't think you should look at that quarter. You should look at the full year margin. So around 22% is our target. It's something that you can safely assume that we will continue going forward. We also have to be very careful not to try and be short-term in our thinking. We know there's a huge market out there. For us, it's a marathon and not a sprint. So we have to continue to offering value for money for our consumers,
So no, just, Credit Suisse is a brokerage which covers your company, and they've maintained an underperform rating even though they've hiked the price target on the business. Now, their only concern, and since you've signed this pact, it's pretty much, done and on the table. The research firm is saying that, they are worried about whether the structural story can continue, whether you can see the height of growth that they witnessed between FY10 to FY19, which has taken, the valuations of your business to 53 times and beyond, sky high levels, right? And your stock is at almost 26,000. Do you think that there is enough ammunition in the strategies that you have with the women's innerwear business for you to scale up and perhaps see that kind of heady growth numbers once again?
No, why only women's? Even in men's, we are only today, our penetration of our potential target market is only 18%, and that's of a pie which anyway is ballooning, at the rate of 16% in terms of spend. So we're not worried about continuing our growth path. We just have to keep on trying to outdo and outperform ourselves, and I'd be very surprised if we don't continue on the same path.
So Sunder, it's a very bullish sounding you, and you've given us the near-term visibility as well, saying that 22% is the kind of margin growth that you're hoping to garner. But tell me more on a longer-term time frame. What is it that we can expect from you in, say, the next 5 to 7 years? As in India itself, you're seeing this huge change from the unorganized to the organized market, the aspirational Indian, all of that put together. What is it that we can expect from you in the next 5 to 7 years?
Things will only get better.
as they have for the stock price, Aisha. Sundar, thanks very much. We'll leave it at that. Thanks very much for joining us and being very candid about your growth plans. Appreciate it, and all the very best for the future. Okay, that's Page Industries. The Jockey Pact has been extended to 2040. I think that just rests the case on their growth plans. With